Started. Good afternoon. Welcome to the Driving Profits in Your Business webinar. I'm so excited to have you here today and to teach you about being intentional in your business. This webinar will show you a simple cash management system that you can implement in your business today. This methodology has been a game changer for thousands of businesses, and I'm thrilled to be able to teach you the basics today. So thank you for joining me, and let's get started. A couple of housekeeping tips. Please use the chat. First, please let us know where you're located and what your business does. Make sure to ask questions and make comments, and we should have time for questions and answers at the end. To introduce myself, my name is Carla Rubel, and I started my firm in 2006. And I love small businesses and small business owners. The best way I can show that love is through bookkeeping. A couple of years ago, I found the book Profit First, and I was hooked. I was so excited. It gave me the tools to better explain the concepts that I had been speaking to my clients about for years. The Profit First methodology provides a simple cash flow management system to help business owners intentionally keep some profit and to pay themselves a sustainable living wage. I was so enthralled with this system that our firm became Profit First Professionals, and we were voted Rookie of the Year last year. Now, enough about that. Let's jump right in because we have a lot to get through in the next hour. Here is a checklist of ideal information to have available to make the best use of your time here together. Here's a checklist of some useful information to make the most out of today. Now, if you weren't able to gather your financial statements and bring them with you, don't worry about it. We have added sample financials to this webinar that you can use to go through the exercises, and then you can go back with the recording and perform the same activities with your actual financials. So what we're going to need to do these assessments is your cash-based profit and loss or income statement for the last 12 months. If it shows the percentage of your expenses to revenue, that's a bonus. You'll also need your cash-based balance sheet for the same period. And if you were able to get comparable balances for the prior period, that would be awesome as well. You could also use your last completed tax return or your bank statements for the last 12 months. These will take a little longer to gather that information, but you'll still be able to get through the exercises. And if you don't have any of that, please take good notes and ask questions and work on these activities later. Owning a business is rewarding and stressful. Many reasons people start businesses is the passion and strong interest for something, flexibility of their time, recognizing an opportunity or need. Maybe they want more independence or they want to leave a legacy. Some people want to create jobs. Do you have any other reasons why you started your business? Feel free to put those in the chat. Also, many small business owners pour everything into their business and they don't take care of themselves. It is so important that business owners support themselves, their families, and their lifestyles, both financially and emotionally. Many business owners let these needs slip to the side when they're getting their business started, but you need to take care of yourself always. You're contributing your time, your skills, and a great amount of effort. You need personal financial stability for yourself and your family. Being able to pay yourself well gives you motivation and boosts your morale. And it's important that you have financial means to invest in your own personal growth. That is why cash management system is so important. All right, today we're going to have three main goals. Those are understanding where your money has been going, creating a customized roadmap to permanent profitability, and three, learn how to listen to your business and make changes to keep it on the road of profitability. Now we'll jump into some history. Historically, we've probably all been taught that your sales minus your expenses equal your profit. That's what GAAP accounting says. That's what traditional accounting says. You look at your year-end income statement and how much profit you have. However, in comparison to what the profit is on that income statement, how much cash do you have in your bank accounts? If this formula was the best way to run your business, then why do so many small businesses fail? Cash flow issues are among the top reason why small businesses struggle. A recent study found 82% of small businesses fail due to poor cash flow management. Because without cash flow management, you can't pay your employees, you don't pay your vendors, and you can't pay yourselves. So cash flow management is critical for survival. And that is why our system is based on behaviors that us as humans have instead of traditional accounting ways. The cash flow management system keeps us in tune with how our business is spending its money throughout the year. It provides the clarity needed to understand where our money's coming from and where it's going, and this is a necessity in planning on the growth in our business. Cash flow makes sure we're being deliberate with every dollar that comes in and out of the business. So, we're going to flip this around. New school. How about if we ran our business with sales minus profit equals the expenses? Profit should not be an event, it is a habit. So, some people may hear this and think that this sounds very greedy, and that is not it at all. A company has to be profitable. Profitability allows a company to hire more workers, pay them a higher wage, provide better benefits, vacation, paid medical leave, upgrade your equipment more frequently, which makes for a safer and more pleasant work environment. Plus, it allows you to help your community, sponsor a Little League team, sponsor wells in a third world country. Whatever passions you have to have profit to support those. Only sustainable businesses can put people first, and profit first keeps businesses sustainable. After the profit is taken, the company will survive and thrive on the rest. This cash management system we're teaching on is based on this formula. It works with human behavior in multiple facets, like releasing dopamine and encouraging positive behavior and by satisfying Parkinson's law. Let's reward ourselves responsibly and run the business on what's left. So I want to take a moment to explain Parkinson's law if you're not familiar with it. If you've heard of Parkinson's law, let us know about it in the chat. So basically, Parkinson's law states that we will spend whatever we have allocated. It's true for time and money. If we allocate 4 hours or 2 hours to a task, odds are that's how long it's going to take us. If we allocate 1,500 or 500 for a project, that's how much it will cost us. Traditionally, most businesses have one, maybe two bank accounts. When all the money goes into one account, we check our bank, see a bigger than normal balance, and think about all the things we need for our business. Unfortunately, when we handle things this way, we forget about the large debt due next week, or that payroll will be higher than usual, or can you think of any other examples? Go ahead and drop them in the chat. This cash flow system combats that tendency by dividing our money into multiple bank accounts, each with their own specific mission. Now, when you look at the balances, they're smaller, and we know what their intended purpose is. This helps us control our unplanned spending. So, opening those 5 bank accounts, we highly suggest what we call the foundational 5. They are the income bank account, where all of the revenue that you from all of your sales will go to, the profit, owner's compensation, a tax account, and the operating expense. Now, this may sound overwhelming and complicated, but like all new systems, once you establish the habit, the rewards will outweigh the initial discomfort. As I mentioned, the income is serving tray up all the income, all the sales. And then twice a month, we recommend the 15th and the 25th, but this is completely customizable to your specific situation. We will allocate everything that's in the income account to the profit, the owner's compensation, the tax, and the operating expenses. This allocation will be customized, the percentages will be customized to your business finances. Just starting with 1%, so 1 penny of every dollar that comes into your business, we're going to move to the profit account. This will be a huge win for you. Now, when the system is fully implemented, we want the business to be paying you, the owner, profit, owner's compensation, and any income taxes that the business and the owner will owe. And then the rest can be spent to run the business, getting your products and services to market. Now, as I mentioned, Profit First is the cash management system that will bring clarity to your business finances. But how do we implement it? That's what we're going to go through next. Using either your own actual financials or the sample financials we provided, we're going to do a quick assessment. This assessment will show you how the business is spending money now, what the ideal spending is, and how to get there. Now, if I go too fast, don't worry. You can go back and take your time, fill it out more completely after this webinar. We will be sending out the recording to everyone in attendance today. Now, let's figure out where your business is now. The instant assessment steps are in the PDF. You may find it helpful to screenshot it if possible as well. All right, this is the chart we're going to fill out. Current numbers from the reports will go in the actual column, this first column. And they're on page 3 in the PDF handout. So in this top line, enter your total revenue for the last 12 months. Do not reduce it by any employee costs, wages, anything like that. Now, material and subs is any cost of goods that is more than 25% of your top line revenue. Now, this would be materials or contractors that you're paying, but not employees. If that equals more than 20% of the total revenue, go ahead and put that in that second box right here. Now, your real net revenue is the difference between those two numbers. Now, if you do not deliberately set money aside for profit right now, then go ahead and put 0 in this profit box. Don't worry about that. 99.9% of people we work with will have a 0 in that box. Now, the owner's compensation. Look at the owner's comp calculation sheet on page 4 in the PDF. Go ahead and look at your income statement, profit and loss statement, one and the same, and look at any of those expenses on there that are solely for the owner's benefit. Those could be cell phone, car expenses, sometimes travel, anything that really the company wouldn't have as an expense if it wasn't 100% benefiting the owner's comp or benefiting the owner. All right. Now, if you are deliberately saving money, setting aside for your quarterly income tax payments or any other tax payments, if you're deliberately saving money right now, go ahead and put the amount that you have saved in the tax box. And then quick, add up all the other expenses that you haven't put anywhere else, including any loan expenses or loan payments on the balance sheet, and put those in the operating expense box. Okay. I know we're moving quickly, but I want to get through this in our time. Now, take the amount in these bottom 4 boxes, divide it by the real revenue number in this third box, put that percentage in this column that's titled CAPS. CAP stands for current allocation percentage. So all this is what is actually happening in your business right now. It's just our starting point. And beware that the caps may equal more than 100%. And that is due to could have had money from a previous year, profit saved up, and you spent it in this year, so it is fine if it's more than 100%. Now, look at figure 1 in your PDF and find the range that your real revenue fits in. The percentages in that column under your TAPS, which stands for target allocation percentages, put those in this fourth column, TAPS. Now, this is the percentage that a healthy average company would use in each of these areas based on the amount of your real revenue. This is just a starting point. The awesome thing about this program is it can be 100% customized to your specific industry and to your specific goals. And we're just using this as a starting point. Now, next calculation. Take the dollar amount in the actual column and subtract the dollar amount in the profit first column. Okay, in the next column, the profit first dollars, PF dollars, we're going to take the percentage in the TAPS column and multiply it by this real revenue. That is the dollars that you should spend, ideally, in each of these categories based on your real revenue. After you're done with that, you're going to take the dollar amount in the actual column and subtract the dollar amount in the PF dollar column and put this in the bleed column. Now, this amount may be negative, and that is perfectly common and not a problem. If the amount in the bleed column is negative, in the fixed column, write the word increase. And if the number in the bleed column is positive, write decrease in the fixed column. So basically, if the amount is positive, you have too much going to this bucket, this allocation. So let us know in the chat how you're feeling about this right now. And does it make sense? And if you have any questions, now's a great time to drop those in as well. We might not answer them as we're going through. We'll get to them at the end. Okay, now the fun thing to get started. We know where your company is, what's happening now, just happening. I'm sure most of you are not making it happen. Now we're going to see where we're going to go. Now, again, the percentages are averages from business in all industries. However, it's a starting point. We have to start somewhere. So, in this first column for your caps, enter those percents in this first blank column. Copy these caps right here in the second column over to this column. Now, in this past slide, this third column with your TAPS, take these percentages right here and enter them in the very last column on this sheet. Now these are where we're trying to get. This is our destination. Now they're an ideal destination, and they're not where we're starting. And we're going to take very small steps and have ideas in between to get us from our starting point to our ideal ending point. There's no way, like in this example, that we're going to take our owner's comp from 19% that we're currently getting and tomorrow start taking out 50%. You would not be successful and you're going to tank your company, obviously. So, baby steps. So, these other 6 columns in the middle, these are the baby steps. So, if you're not saving anything in profit, again, you're going to start taking 1 penny from every dollar and putting it in your profit account. And that's what we'll do the first quarter that we're implementing this. I will say that the majority of people, when you look at your operating expenses, really look into them and figure out how much they are costing you and if there's anything that you don't really need, that most people find 10 to 15% that they can cut in their operating expenses fairly quickly. So as I stated, most companies can easily remove 10 to 15% in operating expenses in the very first quarter. So just go ahead and fill this out. This is just, it's kind of like setting your goals. It's just a starting point. As you can see from this example, profits, just kind of increase them 1% each quarter. Owner's comp is going up, 3 or 4% until we're trying to hit this 50. Same with all of them. Just want to make sure that each column, as you go through this, continues to equal 100%. Now, as your expenses go down, revenues go up, and it's easier to reach these other target goals. So do not get discouraged. Let's just fill this out. And hopefully all of you recognize and celebrate all your wins, the big and the small. Now, big wins are easier to recognize, but small wins are super important as well. And they take a little more intentionality to see. Now, I do encourage you to spend time every day celebrating even the small wins. So, what are some wins that you've had recently? Stuck to your schedule for the day? Win. Showed up at this webinar? Win. Some ones you can look forward to after you get your business on the road to profitability are when you set up those extra bank accounts. That's a win. Do your first allocation? Big win. Save $20 in your profit account. Win. Yes, the profit count is to celebrate. Rewarding ourselves. This is scientifically based because rewarding ourselves releases dopamine. And dopamine contributes to us feeling happy and therefore motivated to keep doing what created that feeling in the first place. Another win. So to recap, profit is used to celebrate. Now, as you're building that bank account balance in your profit, if you have debt, take 50% of your profit to pay extra on those debts. But take the other 50% to celebrate. Your first profit distribution may be the price of a dinner out, but keep at it and you could be paying for vacations or even vacation homes. All right, so let's get going. So what comes first gets done and what comes last gets ignored. So what are you going to do first? Put it in the chat. I know that this has been a lot of information and that this might seem like a lot, but I want to challenge you. One baby step is to open a bank account and put 1% of all the money that you receive into that account. Now, we do have a bonus for anyone who opens a profit account and transfers money into it by August 1st, 2024. If you open that account and you make a transfer, screenshot it, blank out all the personal information, and email to info@cfoaccountingservices.com. And after the confirmation, we will send you the bonus. Mahatma Gandhi said, "The future depends on what you do today." So today is the time to start looking forward to the beauty ahead. You cannot change your past, but you can change your future. So let's make that future more profitable. Now, are there any other questions? Add them to the chat. We're out of time, and I want to thank you for taking your time today to join me. I hope you got some useful information out of it. And if you have any questions when you're going through the exercise, please make sure that you take down this information and contact us. And we will be sending out the recording to all the registered participants as soon as it is available. Thank you.